swing high at $186, which is basically where the May high occurred, and also the early May, late May top there. And we're now basically just moving within a corrective price range. We can define obviously some breakout levels that are also within the range. We will do that in a minute on the smaller time frame. But to give you a good understanding of the context, please note that the Fibonacci support area consists of 4 levels that could be relevant, especially here this area around $143, $144 provides some support right now. Then we have $133, $123, and $109.78 as key support. Especially the $109.78 level must hold to keep a bullish thesis alive. Yeah? So any break below it will likely lead to invalidation, and the invalidation point is here located at around $95. That's the April low, but there's a difference between Fibonacci support and invalidation. So I would say let us also take a look at the smaller time frame for Solana. This is here this smaller time frame pattern in which we have a WXY structure we are tracking. So we have a 3-wave move down after the price from the price top in this diagonal pattern here in wave 1. And then we are now in this wave 2, which is obviously a WXY structure. Well, it could turn into something different. It's not so important to understand the exact microstructures here. However, they can be a tool and help us understand what are the nearest resistance levels. Yeah. There are many, many options or many routes the market could take in this wave 2 correction. It is not so important to understand all the small microstructures. That rarely gives you an edge. But obviously these videos are also for educational purposes. I regularly explain that the microstructures are really, really fragile. I mean, at the moment, the price respects the roadmaps on the chart here really, really well, and all the levels and everything. But the actual micro counts, please understand, they are really only a tool to give us these resistance and support levels on the chart, especially here also the micro resistances. And even they are not meant to hold necessarily. They are just parameters for a wave count. So that means if, for example, the market in this Y wave to the downside forms indeed an ABC structure, then in the C wave down, the market should stay below $152. But a break above means that, okay, we probably never started a C wave. We're still in the B wave. But would that really change anything? Would that really be meaningful? Not really. It would still mean we are likely in a correction, which should see this resolve lower. And we could target the blue zone, which is an ideal target zone within this whole correction between $109 and $129. So again, we're likely moving down in a C wave. That's the current thesis of wave Y of 2. And this C wave, is a 5-wave move. Every C wave is. And it's, however, an ending diagonal. So the third wave in the C wave is an A, B, C structure. And we can even debate whether this B wave is still unfolding. Maybe, but this is really noise. So that should give you a good idea where we stand, a good overview of the resistance levels. I hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Thank you very much. Bye-bye.